Assalamu alaikum and hello everybody. This is Zeeshan Hasan, and now we'll be doing the first chapter of audit assurance, that is audit and other assurance engagement. If you have any questions, then you can contact me on WhatsApp, which is +923021777706. Okay. So before we know what is audit, we should know that why audit is needed. So here is the example for it. For example, there is a guy over here. He started his own business, right? This guy started his own business. This business has grown to a certain level after the business growth has stopped at this point due to physical limitations, mental limitations, the financial limitations. So he decided to include partner with him. He include the partner with him, and again, business started to grow. At one point, the growth has again stopped due to the same limitations. So now what they decided to listed this company into the stock exchange. When they decided to list it, the company in the stock exchange, what happens? Shareholders came into the company. Now, let's say the accounting period of the organization is 1st January to 31st December, right? On 31st December, what directors did? They issued a financial statements. When they issued a financial statements, what happened? Directors, sorry, the shareholders look at the financial statement and they ask, what is the guarantee that this financial statements are absolutely correct? Director said, we cannot give you the absolute, we cannot, we cannot give the absolute assurance. Shareholder said, then why did we hire you? Director said, hold on, stay calm. Uh, there are lots of estimates in the financial statements, including depreciation, bad debts allowances, receivable allowances, etc. So, and estimates they change time to time. So, how can we give you the absolute assurance? We can provide you the reasonable assurance. So, director, sorry, the shareholder said, how can we believe that these financial statements are reasonably okay? Okay. Uh, one of the peon, the clerk came in to give the water to the one of the directors. So director asked him, tell them, are we the dishonest people? He said, he is so honest person. They are the so honest person. They always give salaries on time. They can't be dishonest. Shareholder said, we cannot believe on him. Another director's wife came in to give him a lunch. Director asked him, darling, please tell them about my character. She said, he's so innocent guy. He even didn't look at the other girls. How can he cheat on you? Shareholder said, we can't believe on her as well. Now directors got irritated and asked, whom do you will believe? Director said, someone who is neutral, someone who is independent, someone who has the knowledge of what IS, IFRS. If he will examine the he or she will examine the financial statement, we will believe that these financial statements are reasonably okay. So now the need of the audit arise. So now what is audit? See, look at the definition over here. An audit. An audit is an independent, not dependent, but an independent examination, not investigation, but the examination. You go to the British Council for the ACC examinations. What they do, they will search on you outside the examination center before you enter into the examination center, and then they will keep an eye on you, being alert for the any of the situation that you might cheat or ask about the questions to your fellow candidates. All right, so they will be alert. That's examination, right? It will turn into investigation. It's an examination, remember, it's not an investigation. It will turn into the examination if they will find something uh, ambiguous there, or something fishy, something that they find that you are involved in fraud, then they will start inquiring you, searching on you. That's investigation. Upon investigation, we will learn in forensic audit, in advanced audit assurance paper, right? So it's an examination of financial statements to express an opinion on whether the financial statements presents a true. What is true means? What is true means? Everything which is in books are in financial statements. You know, which books? Sales day book, purchase day book, general ledgers, etc. Right? Now, true and fair view. True and fair. What is mean by fair? There is no biasness. There is no discrimination. Even discrimination. True and fair view. Now, what is mean by view? View means view means that according to the professional view or the professional judgment of the auditor, uh, this financial statement presents true and fair view according to the professional judgment in all material respects aspects. So here, one more thing. Even even the definition of the audit saying that be ready, immaterial errors still can be there, right? I hope you get it till here. And that's the major thing of the scores of the audit. Uh, your audit fee is all about this. You're done. Tada bye bye. Oh wait, don't worry. I was just joking. Okay. So that's audit. What is an audit? Now, what is internal audit? An independent, objective assurance and consulting activity designed to add value and improve an organization's operations. Okay. It helps an organization accomplish its objectives by bringing a systematic processes. Okay. So it is an independent, objective assurance and consulting activity designed to add value and improve an organization operations. How they will improve an organization operations? They will continuously evaluate or examine the different functions of the organizations, including the finance, including the supply chain, purchasing, production, and they will look at if there is any weakness in it. Is there any weakness in the controls of the organization? If there is any, they will provide the recommendations to improve them. That is how they will add value into the organization. But the thing is over here is they are using the word independent. So there is a conflict in this definition because mostly the independent auditors are the either the employees of the organization, and even if we outsource them, due to the familiarity with them, independence is hardly there, right? So that is about the internal audit. It's not the complete internal audit over here. It's just an intro. We will cover later about the internal audit into the internal audit chapter. Now, reasonable assurance. We already learned about the reasonable assurance a bit. So, what is reasonable assurance? It is a high level of assurance. It is not absolute level of assurance, as I said earlier. It is a high level of assurance. Okay, so far so good. Uh, Now, assurance services. Assurance services are the independent professional services that improve the quality of information or its context for the decision makers. Factors which do contribute to the increasing demand of assurance services include a rapid expansion of available information, that is, the system capabilities of capturing, processing, delivering relevant and reliable information, the changing information needs of the business and the consumers. For example, minimizing information overload, uh, the increase in demand for relevant information for decision makers. That is, for example, the budgets, the cash flow forecast, the due diligence. Okay, a due diligence means know about your client, what he actually do. Uh, is he actually doing what he's claiming? That is what is due diligence. Okay, emergent technologies, example, automation in the internet and the data analytics, business processes, example, supply chain management, outsourcing, changing expectations, demands of customer suppliers, other stakeholders. For example, quality control, market trends, globalization of business, creating worldwide. For example, ethical supply chain codes, increasing corporate accounting accountability, demanding over more relevant and reliable information. For example, corporate governance, compliance with laws and regulations, environmental performance, corporate social responsibility, and integrated reporting. We have various types of assurance services, which includes, the audit of financial statements and audit of financial statement, which is also known as positive assurance, which is also known as positive assurance. It is known as positive assurance because it is detailed procedures. One thing, it is also known as worm's eye view, looking everything into the deep detail. That is why it is known as positive assurance. That is it is why it is known as positive assurance. Also, even when we look at the audit report, the wordings are live based on our audit. This financial statement presents true and fair view in all material aspects. Then we have review of historical financial statements. It is also known as negative assurance. The review of financial statement, also known as negative assurance. It is less detailed. It is less detailed. It is also called a bird's eye view, looking at the things from the top, right? Furthermore, furthermore, when the report on the negative assurance or the review of financial statement, the reporting is like the opinion on the review of financial statement is like based on our audit, nothing has come to our attention that cause us to believe this financial statement does not provide true and fair view, right? So here's the difference between the two. Then we have prospective financial state information, which has been done on the cash flows, reviews, and all. Right. It also contains negative assurance on it, sort of a negative assurance because the opinion on it is like based on our reporting or our audit, nothing has come to our attention that causes us to believe this financial statement doesn't provide true and fair view, provide negative assurance on it, opinion on it. Then we have business ethics audit, social responsibility reporting, environmental reporting. Again, their is negative assurance, risk assessments, including e-commerce, value for money audits, performance measurement, systems and control, reliability. There is no assurance for it. They just stamp it, audit it. That's it. Okay. So far, so good. Now, as an assurance service, it's a include assurance engagement. The subject matter, it is a financial statement prepared under the applicable financial reporting framework. For example, IFRS accounting standards. Then we have three-party relationship includes the directors, which are also known as responsible party, as they are responsible for the financial the practitioner, that is the external auditor. Then we have the shareholders and other intended users of the financial statement. Okay. The criteria used to evaluate the financial statements include the financial reporting framework. Then we have the external auditor plans and performs the audit engagement to obtain sufficient appropriate evidence to support the expression of an opinion on the financial statements, and then opinion in an assurance report, that is the independent auditor's report. Right. So these are the contents of the assurance services. But no, you are the confused. Let me try to explain you a bit better. I hope you will get it. Here is the common man example. For example, it's a shared, by the way. Don't laugh on this. Otherwise, I will send it to you for free at your address. So, for example, it's you, it's your friend, and it's a shopkeeper. Okay, it's you who has to use this shirt. So, who you are here? You are the intended user. Intended user who has to use this shirt. Okay. You ask your friend, how's this shirt? He said, it's very expensive. You said, I don't have any problems of funds or money. I can afford it. I'm asking you in terms of color, quality, design. Okay. So, okay. Now that this shirt is actually word, it is a subject matter. Okay. You are the intended user. This shirt is a subject matter. From the friend to whom you asking the opinion is the expert or the practitioner. The shopkeeper who is responsible this shirt is the responsible party. Okay, the color, the quality, the design is the criteria on which basis your friend will collect the evidences and will give you his opinion either to go for this shirt or not. I hope it is clear to you now. In the same way, uh, let me change the example now. These are the financial statements. Okay, these are the financial statements and financial statements. Okay, now these are the financial statements. Here is the shareholder, here is the auditor, here is the director, the criteria on which financial statements will be assessed will be IFRS, IAS, IFRS. Right. Now, the shareholder, financial statements are the subject matter. Who is the intended user? The shareholders are the intended user. The auditor is the expert, or you can say practitioner. These financial statements you already know is the subject matter. IAS and IFRS are the criteria on which basis the auditors will gather the evidences and will provide you the opinion on the financial statements, right? Directors are the responsible party. Now, here, auditor will gather the audit evidences basis on this IAS IFRS criteria. They will examine the financial statements and they will provide you the opinion. So overall, this is a assurance services. I hope you get it. Right. So now the stewardship as an assurance service. You know, generally companies are owned by the shareholders who are the owner of the business and are the principals. And are the principals managed by the directors. They are the agents of the principal who are appointed by the shareholders. Simple. The shareholders appoints auditors to report to them, provide assurance on the information provided by the directors, the annual financial statements as required by law. The essential attributes of the relationship between the directors, the shareholders, and the auditors are the stewardship, agency, and accountability. Okay. Thus, what is stewardship? Stewardship actually are the one who take care of assets, who take care of the assets and use them assets on behalf of the principals, earn from it. The agents are the one to whom principals hire them to do the contracts on their behalf, right? Now, when they get the uh, power of stewardship and agency, they got another thing in gift, that is accountability. What is accountability? They are answerable for their actions, right? So, stewardships is the practice of managing another person's property, right? Property directors and other managers of an entity are responsible for stewardship of the property that the entity which the shareholders own. Agency, an agent, an individual for another entity employed or used to provide a particular service. The individual using the agent is the principal. Accountability is where one party is held responsible, answerable to other another party. It will be required to justify the actions and decisions to that party. Now, auditors report the the objectives of an second. Yeah. The objective of an audit of financial statement is to enable an independent auditor to obtain reasonable assurance about whether the financial statements are free from material misstatement, whether due to fraud or error, and thereby express an opinion on whether the financial statements are prepared in all material respects in accordance with an identified financial reporting framework. This is it regarding the audit report till for now, as we will study about it in the chapter of audit report. I hope you get it. Management and auditors' responsibility. Management is responsible for preparing and presenting fairly the financial statement. Example, accordance with the applicable financial reporting framework, which includes uh, designing, implementing, maintaining the necessary internal controls of the organization. Okay, selecting and applying appropriate accounting policies, making accounting estimates that are reasonable in the circumstances. Management responsibility is stated in the auditor's report. Remember that. Okay, the engagement letter between the auditor and directors are the written representations from the directors to the auditor. Okay, the auditor is responsible for expressing an opinion. It's responsible for expressing an opinion on the financial statement based on the audit. The scope of the audit is described in the report in an appendix to the auditor's report, okay, by a specific reference to the website of an appropriate authority. The auditor is not responsible for the financial statements from form and content. Although audit opinion enhances the credibility of financial statement, users cannot assume that the opinion assures future viability of the entity or the efficiency or the effectiveness of management's stewardship. Remember that. Now, reasonable assurance, as we all know, it is a high but not absolute level of assurance. Now, what is material information? Information is material if omitting, misstating, or obscuring it could reasonably be expected to influence decisions that primary users of general purpose financial reports make on the basis of those financial statements, which provide financial information about a specific reporting entity. For example, there is a it is a financial statement, and we have a liability of $500,000. So if what we do, if we include this in financial statement, you may decide not to invest. Okay, and if I what I do, if I exclude it from the financial statements, you may decide to invest. So that means this information can influence your decision. Its emission, its omission can influence the decision, your decision. So this information is material, right? That is materiality. What is professional judgment? The application of relevant training, knowledge, and experience within the context provided by auditing, accounting, and ethical standards in making financial decisions about the courses of action that are appropriate in the circumstances of the audit engagement. Professional judgment is necessary in particular interpreting relevant requirements and applying ISAs in identifying and assessing risk of material misstatement in determining nature, timing, extent of audit procedures to meet the requirement of ISS and gather audit evidence in evaluating whether or sufficient appropriate audit evidence has been obtained in drawing conclusion based on evidence. Example, assessing the pervasiveness of the control, conflicted evidence from different sources, and the reasonable of estimates made by the management. What is professional skepticism? Uh, an attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement and a critical assessment of evidence. Let me give you a common example. Again, ACs for ACC examinations, right? You went there, they check you outside, and then you went inside, they keep an eye on you. So, what is that? That is professional skepticism and attitude, which includes a questioning mind. They keep alert to the conditions. Okay, they're not assuming you are honest person. They are not either assuming a dishonest person. If they will assumed you as an honest person, seriously, you all can copy paste each other's answers. And if they assume you as an dishonest person, they will come after every 5 persons and they will ask you to give further searching you out. You even not able to complete your 10-mark question in the exam. Right. So that's a professional skepticism, being alert to the conditions. All right. Keeping and questioning mind. Okay. Of true and fair view. So just rewind it. The term true and fair view is not defined in ISA. True or truth relates to, you know, factual accuracy, bearing in mind materially the information provided conforms to required standards. Fairness relates to the presentation of financial information and the view conveyed to the reader. Such information is free from bias and discrimination. They reflect commercial substance and reality of the underlying balance and transaction. View indicates that the professional judgment has been reached. A degree of impression is inevitable because of the inherent limitations in an audit. Example, auditor does not inspect 100% of all transactions due to a timing constraints. Okay, so far so good. Now, here is the overall audit cycle. The audit process is often deposited a continuous annual cycle of broad stages. Firstly, what they will do, they will agree to the terms of the engagement. Then they will understanding the entity and its environment. Then they will plan their audit. They will assess risk in the organization. They will assess the risk related to the internal control of the organization. Then they will test operating effectiveness of the internal controls. Okay. Then they will apply substantive procedures on balances, transactions, and disclosures. Then they will review their procedures. They will obtain any written representations if required, and then they will form an opinion or auditor's report. So that's the overall uh, cycle, right? See, accept audit away. Now there is another deception of process. Okay, you can see over here. Auditing, accept audit engagements, understanding the entity and its environment, assess the risk of material misstatement. If there is effective controls expected, if yes, then they apply test of controls, then they will reduce substantive procedures, then they will do final review and then audit report. If there is no effective controls of expected, they will communicate deficiencies to the management. They will apply full substantive procedures. C, test of controls is eliminated in this case. Then they will report to management. They will do final review, report to management, and then auditor report will be issued. So far, so good, right? Then assurance engagement, an engagement in which particular expresses a conclusion designed to enhance the degree of confidence of the intended users other than responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. What is assurance engagement? I already told you it's a positive assurance. It's audit and it includes detailed procedures, right? It includes analytical procedures, it includes substantive procedures, test of controls, everything is there, right? Analytical procedures, test of controls, substantive procedures, all detailed, worm's eye view, remember. So, international frameworks for assurance engagement, we have audit, that is the positive assurance. We have review of historical financial statements, that is negative assurance. We already looked at it. Assurance engagements other than audit or review of financial statements, we have 100 plus ISA, 100 plus international standards on auditing. Right, we will look in audit assurance and AAA courses about it. Then we have ISRE 2000 plus standards on review engagement, that is on negative assurance. Then we have 3000 plus ISAE, that is international standards on assurance engagements. Assurance engagement, we have various types of assurance engagement. We already know that is, uh, the review, the positive assurance. Then we have compliance engagement, uh, agreed upon procedures, right? Five elements of assurance engagement. We already done that. Types of assurance engagement, reasonable assurance engagement, that is audit assurance, positive assurance, limited assurance engagement. We already look at that. Okay. That is what I already told you. You can read it. Okay. Reasonable assurance, then limited assurance engagement. As for reasonable assurance engagement, the particular understand, assess risk and respond to them, but in context of limited assurance, the evidence gathering procedures are deliberately set to be more limited. Example, analytical review and inquiry. Okay, that is like negative form, the review which I just told you. Okay, see, all is here. So that's the first area of audit and other assurance engagement. If you have any questions, you can ask me on my WhatsApp. Till then, take care. Bye bye.